What's going on, guys? Welcome to another video. This video, we're going to be discussing 4 simple tips for trading the open. For me, the open is one of the most profitable times in the market because it has the volatility and you really don't need much more than the first hour of market open to get some trades in, okay? So, we're going to go over 4 simple tips and we're going to start by understanding what your levels are. So the first tip essentially is to look at the previous day, okay? And you want to look at what was the high of day and what was the low of day. So if we're talking about the current day candle, which is forming, we're currently in pre-market right now, but this is Monday's candle. And so you want to know what was the high of the day and what was the low of the day. All right. So in this case, the Qs have a pretty big range. It's a $7 range. So that's a decent size range. And so the first tip is essentially knowing what your high and what your low is. All right. The second tip is avoid trading within this range. So to keep yourself out of trouble, if you're trading a directional strategy, right? So if you're going for bullish trades or bearish trades and you're not running any spreads or any other strategies that are not directional, so to speak, then you really want to ignore everything that happens in the middle here. Sorry, everything that happens in the middle here. You really want to ignore that because it is going to likely confuse you and it's not going to give you a clear direction. So, tip number one, know your high and your low. Also, know the close of day. All right. So, if you mark your close here, our close was it here? It was 350.08. All right. So, by understanding those 3 levels, right, your 4 levels, your high, your low, your open, your close, you'll have a better idea of what the market's doing in the morning. Now, this is your daily look and your daily chart, right? So if we bring this over and we split screen this and we throw up a 5-minute chart, all right, so let's throw up a 5-minute chart and let's look at yesterday's price action because there was a good which was actually the candle that we're looking at now. Let's look at that price action because there was some really good lessons in that, in my opinion. So we're gonna zoom into this. All right, so on the right here we have a 5-minute chart. So I want you to focus on whatever is here in the black background. So I'll put this in focus here. All right, and sorry, I'm trying to dial this in a little bit more. All right, let's start here. So these 3 candlesticks here, essentially what was the market open right here. This is the first 15 minutes of the day. All right. So if we're following the simple tips, yesterday we knew that the high of day was so Friday's high of day was 351.79. Friday's open was 342.74. Friday's low was 341.55. All right, and Friday's close was right near the high, which was 351.49. So understanding where those levels are important for you to trade the market open. So this is why. All right, so first thing in the morning, I'm gonna kind of blow this up a little bit so it's easier to see, and actually I'm gonna zoom in a little bit better into what we're talking about right here. So these 3 candlesticks were your first 15 minutes of price action. All right. And so what I did, the way that I traded this open was I was scalping the momentum above Friday's high of day. So I'm going to color code this green. All right. And that was Friday's high of day. As we were pushing up into this level, I entered in to a call position, and the intention, it was simply just to scalp it. So I did. I entered the position and I exited almost immediately within minutes. All right. I took some profit out of this pop here. Now, one of the things that you can see here after this pop above Friday's high of day, which is this green line, you see a big red candle that came in right after that. All right. This leads us to the next tip. So the third tip is mark out your first 5-minute candle. If you're day trading and if you're intraday trading, mark out your first 5-minute candle high. All right, so we'll do it yellow just to change the colors, and then mark out your 5-minute low, your first 5-minute low. All right, so here you have your first 5-minute low, your first 5-minute high. One thing we know to be true is that for your intraday price action to be bullish, you're going to have to hold above at least the first 5-minute high. And you're also going to need to hold above the previous day high for sustained direction to the upside. So what we saw was a pop above Friday's high a day, and then you saw selling pressure come in immediately. Once I started seeing this candle form, I'm immediately skeptical that we're going to see higher for the day. All right. Then I simply mark a line right at the first 5-minute low, which is your low of day. And as this candle forms, I am now stalking an entry for QQQ puts to the downside, right? So as I see this candle form, I'm watching it, and you can see that the candle opened right here. It popped up to this high, and then it started to sell off. As soon as we started crossing this previous 5-minute candle low, I have my finger on the order button. I'm ready to enter in on a market order for some puts on QQQ. I'm not going to talk about picking a strike price right now because you can do this with just shares, and you can apply this to any stock or currency or whatever. Okay, so essentially right here, as we are breaking the first 5-minute low, we know that the momentum is down in the short term. So this is the first 25 minutes of market open, right? So within the first 15 minutes, we got a clear scalp to the upside, which obviously here it didn't last very long because you had selling pressure that kicked in there. And then it confirmed with this next 5-minute candle, right? So then your next entry for a scalp is a break below the first 5-minute low a day right here. So as we were essentially coming right into this level, I have a market order in, I enter my puts, and as it starts selling off, I'm already taking profit. I'm taking profit all along here. I'm not really waiting for, where's the bottom, so to speak, right? I don't want to get the entire move. I just want to get a nice scalp, right? I just want to get a nice move, 15, 20, 25% gain. And that's essentially all you need for a morning trade. You don't need to get 100% trade, within the first hour of market open. So anyways, as we break this level, we're entering into the downside. Now, as you can see, it did go lower and then we ended up bouncing. But look at where we end up bouncing to, right? We end up bouncing right back to that green line, which was Friday's high a day. So this is why knowing where your open, low, high, and close is so important, because price normally gravitates back to these levels. All right. And so you could see it bounced back up, and then you had some more sell pressure. And look at what happened here. Interestingly, look at what happened when we crossed that that first 5-minute low again. So here we crossed above it. It got rejected up here. And then we had a big sell pressure candle, which broke that level again. we went lower, and then the market came back, it fought back again a little bit, and it closed, it closed a little bit higher. All right, it closed red for the day. So essentially, to recap, the first 3 tips is understand where your open is, where your most importantly, where your high is and where your low is of the previous day, because you're going to get some sustained momentum above or below those levels. The second tip is don't trade if you haven't broken above the previous high or you haven't crossed below the previous low. So in this case, I did scalp the break of the first 5-minute candle. Even though we didn't break the previous day low, this was a good indication that there was some sell pressure here. Okay? And so the other tip essentially is understand where your first 5-minute candle is if you're day trading. This is very important. You can use a 5-minute, you can use a 15-minute. I like using the 5-minute candle, and I want to know where my high of that first 5-minute candle is, where my low is of that first 5-minute candle. And so above or below that, you will also have some sustained direction. But you can see, if we zoom out on the price action, you can see that it did stay within a range, right? And if you look at, I'm going to just delete all of these lines here so it's a little clearer. You know, if you look at, we'll go back to just the daily chart, right? We didn't break the low. We didn't break the lows of the day, but we did just pierce the high of the day. And that right there, crazy enough, was good enough for a scalp. And then again, the 5-minute candle break was also good for a scalp. So we don't want to be trading generally within a range. So going into today, right, we have the same idea, right? What's the high, what's the low, right? Even better, we have a doji candle, and dojis tend to show indecision or balance between buyers and sellers. So if we break below this day, then the sell pressure is going to lead us a little bit lower. It's likely to lead us back into the Friday levels. Okay, so it's likely to lead us down here. Okay, now if we break above the high of day from yesterday, then this is where you need to have additional price targets set up on your chart. So above this 352.48, the levels we have are essentially 353.46, and then there's a level up here at 356 and another level at 357. So if we break above this daily high, which was Monday, then we could look to the upside. Where are the additional targets? If we break below, we're going to be looking at where are the additional downside targets. So all this can be used in conjunction with your 5-minute chart. And so here, when you go into today's price action, right, which is going to start within less than an hour here, it's this, this area here. Essentially what's going to happen is you're going to have a big range. All right, this is a big range, 352.48 to 345.58. all right. It may not be ideal to scalp the morning open. It may not be, because it might chop around in this zone. It's a pretty big zone. But one thing you could do is you can keep in mind where your close was. Okay, so your close was at 350.08. So anything below the close, if price holds below this closing level here, then the momentum is naturally going to drift it a little bit lower. So that would be kind of a bias that you can have when you're trading the open here. And essentially, if you hold above this level, you may have a bias towards the upside. It may come back to retest the high of day, however it might play out. But understanding those levels, your high, your close, your low, right, even your open, these are going to guide you on an intraday basis. And the first 5-minute candle of the day will also give you some short-term momentum and direction. So to recap, focus on your daily levels, your previous day levels. Also important to keep in mind, what are the larger time frames? What are the weekly levels and things of that nature? And then one of the most important tips is try to avoid trading within this big range, because price could literally do this, right? And yes, you can trade, the range from the high to the low back up again, right? You could do that. But you're not going to have as high of a conviction of a setup, all right? So that's it. Those are the tips for trading the open. And essentially, to wrap it up, is don't fall in love with a direction at the open, right? The reason is because if we look at yesterday's price action, right? This is again yesterday's price action. If you fell in love with, let's say, the upside, you would have gotten shaken out. If you fell in love with the downside, then you would have gotten shaken out on this pop, right? And then again, if you're like, oh look, we bounced off of this low, right? So if you're like, oh look, we had a strong bounce, that means we're gonna go higher. Then again, you got faked out up here because the rug got pulled again. So at the open, don't fall in love with a direction. Take what you can get, right? You had a scalp to the upside, and then you had a nice clean scalp to the downside. So don't get married to a particular direction when you're trading the open. Be quick and take your small profits and wait. Wait for direction. Okay? So hope this was helpful on trading the open. If you need anything else, have any questions, feel free. Let me know. Leave a comment below. Connect with me on Instagram. Talk to you later.